Hello everyone and welcome to the weekend video journal. I spent some time this week trying to redo the format and make it a little more organized, so I hope things work out better, and I'd be interested in any positive or negative feedback. So let's get started. This week was really the tale of 2 weeks. As you can see, this is the chart of the week. We can see that it was basically, we oversold conditions coming into Monday morning, quickly bought up, rallying into and just after the Fed. And then on Thursday, instead of getting our typical Fed follow through, we created on a shorter time frame, a head and shoulders top that basically just led to declines the rest of the week and basically closing down for the week, as all the indexes did. Closed down for the week. I will show you that here. Yeah, you can see that the S&P, here's the returns for the week. So all indexes down. All indexes are down for the year, except for the Nasdaq, which has held up. Starting with the S&P, let's continue to take a look at what's going on here. So for the second consecutive week, if we look on the daily chart, we have closed back below the 2020 level. So if we bring that up here, right about there is the 2020 level. And the reason that's significant is twofold. One, if we do a Fibonacci retrace here, that's the 38.2% retrace. And it has held, sorry, distracted there. It held the first time, broke down the second time, bounced off the 50, and now we are retesting. The other reason that it's significant is because we were basically watching this kind of double bottom here, and you could also call it a kind of a cup and handle. And that was targeting, assuming that this bounce went like this, that was targeting 2169, which would have been all-time highs. However, after the bounce, we're now making a lower high, a lower low, and now it appears we're trying to make another lower high and a lower low. Now we'll see if the bulls can come back in and save this thing once again, as they've had the previous two times, or if we actually get some follow through and really no Santa Claus rally, which will also be sort of telling. So that's why that's significant. To me, this, many would think that this is kind of dead, based on the fact that we broke the neckline early in the week, or last week on last week's close. I like to give it the benefit of the doubt until it breaks this handle level. In particular, this is it's a kind of a small handle. It's not one of those kind of deep handles. So it really, was kind of, I gave it the benefit of the doubt for the rest of the week. Additionally, we saw some bullish price action to kind of save the market there. So, I'm not calling it completely dead, until we break, if we break this low, this pattern's defunct. So I'm looking for some follow through Monday morning, to do that. If we're to gap higher and just roll higher, anything can happen. We shall see. But coming into this week, unlike last, or going into next week, unlike last, the stochastics, or whatever oversold condition you look at, is no longer oversold. So you remember last weekend we were talking about the oversold conditions, and how that could, where that, we basically have seen a bounce from that location every single time, and how that could, be something worth playing. And right away Monday morning, we saw that. If you go back and look at Monday's daily report, you'll see how that panned out with the mini inverse head and shoulders, red dog reversal, as some call it. And into a cup and handle, into a bigger inverse head and shoulders, on and on. So there's 3 or 4 good bullish patterns that led that rally. So, if you were watching the price action, it was kind of easy to see. I was trading it the whole time. I was pretty much all over it. And then immediately Thursday morning, when I saw the head and shoulders top, I was out. I saw the weakness in the morning, and I got out of my longs. But that's for another day. We'll talk about that in a little while. The other thing to talk about here is that the under the surface, clearly things are weakening. There's not bullish developments at all when you start to see bullish patterns fail. And what I'm talking about here is we basically had this kind of under the surface. This is on the 15-minute chart. We had a couple things to look at. We had this kind of, where was I looking at this? Sorry. Let's bring these stochastics down. Bear with me, guys. So we were watching this kind of this wedge, this broadening wedge formation here, this bullish broadening wedge, and typically a bullish broadening wedge target is the high of the wedge, and then additionally we kind of had this this kind of cup handle, and that actually I drew it out. Those basically had targets both at higher highs, up basically here, and I think it was like 2106 or something like that. So that would have basically been up, go up and get this level and then go up and get this level. We use one at a time. But as you can see, it kind of created a head and shoulders on a shorter term time frame. The 5-minute chart. Early on Thursday. Let's see if we can get back there. If the price, it's gone. On Thursday, there was a little tiny head and shoulders right here. You can kind of see it. Yeah, you can see it if I drill in here. And if I clean this up. There was a little head and shoulders Thursday morning. This is what I was talking about. Like this right here, when you see this developing, you're out of your longs. Particular if you're a shorter term trader. And then it basically kind of created another one here, and it was basically at the end of the day, not only were you seeing bearish patterns trigger and complete, but it also, we were watching this kind of cup handle, and you can see, it basically killed off by taking out this low, it killed all these patterns off, and it also killed off this bearish wedge. So the bullish price action under the surface is gone, and on the daily chart, that 2020 level, the double bottom cup handle is very much under pressure, and it has a very good chance of failure, and that failure is basically telling us, hey, there's no more bullish patterns, so at the very least we're looking at choppy range bound trading. The other thing to look at and to note, two things on the daily. This could still very well be a head and shoulders top formation. So if we were to kind of take, this is a right shoulder, this is a big long head, and this being right shoulder, this is a lower high. So this can still be a head and shoulders top. So if we see some follow through, I'm looking for potential support at 1965. You do not buy a Fibonacci support level blindly. You look for support to come in there. I would be looking for some support to come in there. Maybe we get another little bounce that also fails, and then back down here, and then we're looking at a major market top. And I believe the target on this is about 1600. If you can kind of see this left shoulder, head, and right shoulder. So we're not there yet, but we are starting to see the deterioration in price up here. That leads us to believe that that's a very good possibility. From a bullish perspective, back above 2020, the bulls are back in the game. So and this could just be volatile tape that just swings us around that level for a long time. And bulls could be looking at this as kind of an inverse head and shoulders. If it were to break back above here and get high. But if we are to kill this pattern Monday, there's no more bullish technicals to kind of push it higher. So it's going to take some time for the bulls to redevelop those bullish technicals. Basically, as they say, the technical damage is done, and we're approaching that point with any follow through Monday. The other thing to note here that I'm looking at is this, to me, looks very much like how the flash crash started. And I put this image in the notes, but you can see here that we're creating this kind of triangular pattern here and here. So you can kind of see that triangle and how we kind of broke down. People were looking at it here. It broke down and then it was saved quickly. We got back in, had a little oversold bounce into here, and then immediately rolled over. And we're seeing really the same kind of action here. And that doesn't mean it will play out the same, but it's something to definitely take note of. Markets do like to repeat patterns. So you can kind of see, it was a triangle. It broke down, we saved it, and now we're rolling back over. And that's why I say, I mean, if you see that, how this one, when this bar right here took out this low, how things really unwound. So be careful of that, and watch the 1965 level. So for long-term investors, which many of you are, and do not intraday trade and whatnot, or not watching the same things, this stuff is still important, right? So one of the things that I watch are the 10 and 20 day moving average, 10 and 20 month moving average. So this is a monthly chart of the S&P 500. And we can see how when the 10 moving average crosses the 20 moving average, that is a major sign of weakness and long-term, longer term declines. It did it here. You notice how it goes down, it retests it, and then it basically, the 10 becomes major resistance, until here where it crossed back above, and away we go. Same thing here. You see we test, and then it rolls back over. Now, we haven't got that cross yet. But this action, it looks a lot like this over here. If you look at these two things, this action, is looking very similar to this action. It's just this action happens to be above, and maybe that's the Fed put that's keeping it, a little bit higher. I mean, we're in uncharted waters here, so it doesn't, and maybe we just, bounce from here and go way higher. But it's something to definitely keep an eye on. If you see this crossover, you see how it's played out the last two times. So just be aware of that. The other thing that I like to look at is the 12-month moving average, and just clean up the chart a little bit. And that, it's very much quite similar to what you're seeing with the 10 and 20. So now this one is starting to, it's been flattened out since July, and it's starting to turn lower. It's been, kind of flat to chop, up and down a little here or there. And you can see how we've, battled to get above it and below it. But, note how, this has played out in the past. But the low at 12-month, declining 12-month moving average is a warning sign. You make your own decisions. But, something to definitely keep on your radar. The other indexes, let's just take a look at those. The IWM. Let's look at the RUT.X. It's the same thing. If you look at this on the daily basis, we've been watching this kind of, we thought that this might be a kind of an inverse head and shoulders here. But I also noted in some of the daily reviews that, it also looks kind of, when you see these like higher highs kind of, and fail, a lot of times, especially the third one, when that one fails, it's a real major warning, and it basically turns into a bear flag. So you've basically got a bear flag breakdown, a minor, oversold bounce, and now it's going to try and make a new low. Let's see if it does, or if the buyers come in and try to pop this. But, no reason to be really, getting too long this thing until this high is taken out, in my opinion. So watch the Russell closely. Additionally, if we look at this on a longer term perspective, and clean up this chart a little bit, there's our bear flag. I mean, it looks, this is head and shouldersy. Your right shoulder, your head, and your right shoulder. So, and that's got, downside as well. The Nasdaq. It looks awfully very much the same. It's setting a higher low here, on a longer term time frame. It set a higher high, lower high, higher high, and now it's setting a higher low or lower high here. And we'll look to see if we can get some follow through back below that low. That would, that really would tell us that we're going to go down and test these, August lows, or maybe it can hold it and go higher. We'll see. But watch this low again. It's the same thing as the S&P 500. Watch this low closely to see what happens if we get some move below and follow through. That will be a major indicator to this market, to where this market might be headed. On the Dow, let's remove. This one's, same thing. I mean, it was, it's been a laggard all year. And, it basically had this kind of, this trend line, that, broke down. It broke down, did its typical retest, setting a lower high, and it actually set a lower low. So this one is really kind of major red flag zone here, because this thing closed at a lower low on Friday. So this is, this is a significant development, because this is basically a descending triangle that is breaking down below its lows. And so, do keep that in mind. So that wraps up the indexes. Let's just take a quick peek at a couple charts that I believe are worth your while or deserve your focus this weekend. We've been talking about the transports for a while here as a head and shoulders top. And, as you can see, the neckline was this 137.05 level, which broke down, retested, tried to regain it, and now it's making a lower low below that level. So we're now seeing follow through, confirming that this is a head and shoulders top, and the target on that is 104.66. So this is an index that is down 20% on the year roughly, and appears to be headed quite a bit lower. The financials, the XLF. For all of the chatter about how interest rates are supposed to help the financials, it is not visible in the technicals whatsoever. To me, this, if anything, this is a range, and with a lower high in the range. So we shall see if, it looks at the very least like we are going to test the bottom of the range, and then we will see what happens there. But I am not a buyer of this idea that rates are going to help the financials, at least from an index perspective. There might be some, some silver linings in there. Just look at the chart of Goldman Sachs. That'll be about as clear as day to you. So maybe it's the forward guidance that the Fed says they may not raise rates again for a while, whatever. Who knows? But we don't care anyway. It's all in the price action, guys. There's nothing here that tells you to be buying this. If anything, it's range bound. And then the final one is America's darling, Apple. I love this one mainly, because the tug of war between technical traders here and these valuation guys, it is absolutely hilarious. They have so much cash on the balance sheet. They have iPhone 8 this. Look, if nobody's buying this thing, it doesn't go higher, guys. That's all that matters, and the price is telling you that. So you can sit here and argue about how cheap it is and it's cash and all this stuff. If they don't have a good use for their cash, all they do is buy back stock, and they're no longer a growth company. Okay, they have basically a maturing company. In my opinion. But that's not my game. Okay, all I'm telling you here is nobody's buying this thing, so neither should you be. It's very obvious in the price action. If you want to try and buy a falling knife, go for it. Have fun. But this is not going to be an outperforming stock in the near future. I don't know where. I'm not going to sit here and tell you where it's going. I have an opinion based on the chart, but I can tell you where it's not going. Okay, this is overhead supply 101. It is all over the chart. Okay, everybody up here that was buying is underwater. Everybody up here that was buying, and we have a 3% unfilled down gap, is underwater. Okay, it is going to take a massive army or a lot of time to get back through these levels. This thing is not going to all-time highs anytime soon. So I have said it for many months now. No reason to own Apple. You can own it if you want and you think one day it's going to be fine, but I'm in this business to outperform the market, and this is not an outperforming stock. It is not, you are not going to make money in this stock in the near future. In the long term, sure, maybe, but again, if you want to outperform, this is not a chart that you own. And that about does it. I put in the notes, the Econo Day chart calendar to see what's going on next week. I've noted that in my portfolio, I'm holding net short over the weekend due to the fact that we are not oversold. And I'm looking to see some follow through on Monday. If I don't see it immediately, I will and I see some price action that's turning the other way, I'll be quickly to cover. But I'm deep enough in the money that I will be looking for follow through. All right, guys, enjoy the rest of your weekend, and hope this was helpful. Take care.